Today's micro lesson is going to be how a progressive tax works. There seems to be a great deal of confusion on how the progressive tax system is um, actually applied. So we're going to take a look at the concepts that underpin it so that you can be the person in the room who actually knows what you're talking about, which is always great for discussions because we definitely want to hear from people who know what they are talking about in today's political environment. So going back to tax policy, when we started talking about what a progressive tax is, it's where the taxpayer's tax burden actually increases as their ability to pay increases. And this is contrasted with the regressive tax, which does not take into account ability to pay. And when we're speaking about the progressive tax, we're not talking about the dollar amount going up, we're talking about the percentage, the rate actually increasing. Okay, so here is a look at the US tax system's 2020 tax brackets. You'll see that there are 7 brackets. There's 10, 12, 22, 24, 32, 35, and 37% brackets. So we've got 7. So there's a fair amount of progressivity in this particular structure. Okay, we'll see also that there are numerous columns. You've got single, head of household, married filing jointly / qualifying widow, or married filing separately. So we're not going to be looking at all of these categories at any given time. For purposes of this course, I tend to focus on single and head of household because, frankly, you just need to understand how it works. We don't have to do everything in minutia. Okay, so we see the first tax rate 10% for a single person for the 0 to $9,875. That is the tax rate of 10%. Then we'll see from 9,876 to 40,125, they will have 12% applied. Now, there is a little bit, we're just going to focus here. You'll sometimes see the charts listed like this, where instead of like the previous one where they had a range 0 to 9875, for example, in the 10% single, this one just says 0. But in the 12% bracket below it has 9875, which you'll recognize from the previous slide. Why do they do that? Well, if we look at the way the column is titled for singles, individuals, taxable income over. So from 0 to 9875 is actually something that is called for in the way that the column is titled. So I've just put boxes around. We see that there's the 7 rate brackets, and each of the rectangles is a particular situation. The singles is within one, married filing jointly is in another one of the squares. And I highlighted the word over because I want you to realize, is 9,875 over 9,875? And of course, the clever ones in the group right now who are fully awake will be saying, no, 9875 is not over 9875. So it actually belongs at the tail end, the cutoff from the previous bracket. What is over 9875? Well, 9875.01 and 1 penny is over. Okay, 9876 is over 9875. So we look at that, and this is how it's actually intended to be taken. Is the first rate category is 0 up to 9875 because that's the starting point. That's the ending point of the first bracket, because anything over it is the starting point of the next bracket. And so it goes, the third bracket starts at things over 40,125. So you would read the second bracket as being from 9875.01 up to 40,125. Okay. Now, I'm going to point out that this is a fairly progressive structure. As I said earlier, there's 7 brackets. We also have state taxes. This is the federal one that we looked at before, and now we look at the state tax for Kansas, for example. We'll see that there are 3 brackets. Now, that is actually up from 2 that we had under the Brownback tax experiment. So is it as progressive as the federal? The answer is no. State taxes don't tend to be anywhere near as progressive as the federal. And if we look, you as a single person, once you hit 30,001, you're in the top tax bracket for state tax purposes. So do you feel like you're a top earning taxpayer when you've hit $30,001 in salary? Probably not, but for state taxes, you are in the top bracket. Why aren't state taxes as progressive as federal? Well, one is they tend to be a lot smaller rates. If you look at the marginal tax rates that are attached to the Kansas income, the highest one is 5.7%. The lowest being 3.10%. If you look over on the federal side, the highest bracket is 37%, the lowest being 10. So we're not as concerned about progressivity because it's a much smaller slice of tax being paid to the state government. Okay. As well, I think the highest state tax, is California at 13%. And there are also a number of states, like Texas, for example, that doesn't, and Florida, that's another one, and Nevada, they do not impose an income tax on individuals. So there would be zero state tax for income purposes. Now, of course, these jurisdictions have to raise revenue other ways, so they will get it through other things like property taxes or sales and use taxes. So don't ever think that if somebody has no state tax on income, that means that they're not taxed, because that is a fallacy. Taxes are like a shell game. You need to raise revenue for government. So unless your government is doing nothing, no roads, no schools, no infrastructure whatsoever, no state national guard, none of the things that government pays for, let alone public education. So don't be fooled with the, oh, well, we don't have any income taxes routine. They will get it from somewhere else. It's all a matter of allocating which particular source of revenue they're going to use. Remember that income taxes are the only one that attempts to get at ability to pay. Okay, so I want to talk how it actually works. We've all heard somebody say, I put the quote here, I don't want to pick up extra shifts because it'll put me in the next tax bracket and then I'll pay more than I earn, so it isn't worth it. Okay, that's bunk, and it does demonstrate the person doesn't understand how progressive taxes work. Now, it doesn't mean that they ought to take the extra shifts if they value their leisure more than they would value the after-tax dollars they would keep as a result of it. That's a completely legitimate statement. But saying that it'll suddenly make them pay more taxes so they'll earn less, it's not right. So let's look at the lovely little thing that took me far longer to create than it really should have on your screen. You'll see that I've done an infographic. I want you to think of this as every single dollar that you earn in a year, you have placed side by side. So each one of these cute little rectangle-ish type figures represents a dollar that you have earned. So lay them out flat. You'll see dot, dot, dots, because I've laid them out and I want you to think of the brackets that go with them. So what I did here was I used the single taxpayer brackets. Remember I said I'd probably only use single or married filing jointly? Well, for this graphic, I've used single. So when we're looking at this particular one, you see that the first $9,875 that you lay out here is going to be taxed at a rate of 10%. Okay. Then you keep on going, and once you've hit 40,125, all the dollars between 9,875 and 4125, those are all going to be taxed at 12%. You'll notice that I put them in yellow on your chart, on your graphic here. Just because they're colored yellow for 12%, it hasn't affected anything that's happened in the 10% bracket. Okay, no change whatsoever. So the next bracket is 22%. And you'll see that that bracket is from 40,125 up to 80,525. So obviously we know that 4125 is the 0 point of it, and 80 525 is the high point of it. The bookends shall you, if you will. And we see that as well for 24%. So nothing that happens in the next bracket is retroactively changing anything in the bracket before. Nothing. Okay. So when they're saying that if I go up to the next bracket, I'll pay more than I earn. So let me use so $9,875. So I pick up that extra shift and suddenly I have, $9,876 of income. Woohoo. So that extra dollar, it's going to be taxed at 12%. So I'm still going to go home with 88 cents of that dollar. And the $987.50 of tax that would have been paid on the first bracket, the first 9,870, it hasn't changed. So I have not, in fact, paid more in tax than I have earned. That extra dollar does not get consumed in tax because it retroactively takes that 12% and applies it to everything I've earned. That's just horsebucky. Okay. So when we are looking at it, obviously it goes all the way up to the top bracket here starts at over 518,400, and everything over that amount is taxed at 37%. We'll see some of these brackets differ in size, right? Some of them are quite small, and some of them are quite large. Like the difference between 207,350 and 518,400, that's a pretty big bracket. The difference between 9,875 and 40,000, we've got a little over 30,000. Then from 40 to 80, that's 40,000. But 80 from 1 to 163, that's over 80,000. That's a big jump. Especially because the next bracket, the blue one on here, from 163 to 207, we just had an $80,000 jump, 80,000 plus jump in bracket. And the next one, it only goes up by a little over 40,000. And then the next bracket goes up by over 300,000. So the brackets are not necessarily, how do I say this? They're not necessarily the same amount, okay? Where do we draw the lines? Good question. That's politics. Is ability to pay changed when somebody suddenly earns $9,876 instead of $9,875? And I'll tell you, that's probably pretty arbitrary. We've got a bunch of actuaries / tax accountants, tax wonks who are probably locked in a back room somewhere calculating. They slide their lunches under the door to them, those kind of people. They're the ones who come up with the lines to draw. And every year, the tax brackets are adjusted for inflation. Okay, so these amounts change every year. The Rev Proc that I put on the syllabus, that is what tells you, updates section 1A of the Internal Revenue Code to tell you what is this year's adjustments for inflation. So what are the new brackets? So I'm taking the language specifically from the Revenue Proc, and this is how it's listed. And if you also look in section 1 of your code, you'll see that this is how the tax brackets are presented. Instead of using the last one I used single, this one I'm using married filing jointly. Okay, so we've got, this is the 10% bracket is the first one, so not over 19,750. You'll note for most of the brackets, it's exactly double what a single person is. It's once it hits the 35% bracket, then it's no longer double. But for the first several brackets, first bracket in the previous page, 9,875 times that by 2, and you've got 19,750. So we got a 10% rate. We're applying it. We're assuming in this example that you have earned $19,750. And so what's the amount of tax on it? How do you read this chart? Well, in that first bracket, if you were to fill up the entirety of that bracket, you would pay $1,975. So when it's telling you how to read this particular bracket, say you have earned $20,750. So what do? Do you have to figure out, well, there's this much in this bracket, then that much in that, and then that? That sounds like something that those of you who are math phobes would be like, no, peace out for that particular calculation. You'd be in fetal position, keening under the desk. Yeah, that's not pretty. We're not going to do that. But it actually gives you a shortcut here. Okay? It does the calculation for you. So all you have to do is figure out which bracket does my income fall in. So if I earn, $20,000, I'm in the second bracket because I'm over 19,750, but I'm under 80,250. If I earn 300,000, then I'm in the fourth bracket because it's between these two numbers. So what do? Whatever bracket I figure out I'm in, so let's say 20,750 is my number here. I am obviously in the second bracket. So it has given me the total for all of the cumulative previous brackets at the beginning of the second column. So the tax is, 1975 from the previous column. And if we were in a higher bracket, it would be the total for all previous columns plus 12% of the excess. Well, in the example I just gave you, we have $1,000 over 19,750. So $1,000 is the excess over that. 12% times 1,000, that's 120. So we'd add 120 to our 1975 for our tax liability. And it's the same for each and every category. If I had, if I had $622,051 of income, so the very last category, all I have to do is look over here. Well, there's $167,307.50 from all the previous categories. I'm only $1 into the new category, so 37% of that would be 37 cents. So I'd owe $167,307.87. Okay, make sense? I'm going to do some pictures here just to make sure you understand what we're doing. So up to 19,750, 10%, that would give us $1,975 of tax, which conveniently is actually given as the starting point for reading the tax for the next column. Okay, so if you've got an amount between 19,750 and 80,250, what you do is you try to figure out how much do I have in the bracket? How much am I in? If I have breezed past that bracket, we see that there's $60,500 inside that particular bracket. From the difference between 19,750 and 80,250 is $60,500. So the total tax for everything in that bracket would be $7,260. So what would that be? Well, we would just take the tax from the first bracket, which would be 1975, the tax from the second bracket, which would be 7260, which gives us a total of $9,235, which conveniently enough is the starting point of the calculation for the next bracket. So you really don't have to do a whole lot of math here. All you really have to do is figure out how much have I gone into the bracket that I've ended into. And to do that, I take the starting point of the bracket and I subtract what my income is, and I take it away the starting point of the bracket. That tells me how much there is, and I multiply it by the tax rate applicable to that bracket. So, and the same goes for the next bracket. We see that there's $90,000 worth in the next bracket, $90,800. So the total tax in that entire bracket that would be paid is $19,976 within the bracket. You add it to our previous amount, and it would come up with $29,211, and you'll see that that is exactly how the fourth bracket starts when it comes to instructing you how to calculate the tax. So a lot less math than you probably expected, but now when you look at how that code section and how it's set up, you understand why is there a dollar amount plus a percentage amount. They're actually trying to help you understand, and it makes it easier for you. Or put it another way, we can look at this little video I made here. If you look at your screen, taking the graphic that I made a little bit earlier, now we've switched back to single rates, is we're calculating the amount in each and every one of these brackets, and I've color coded the brackets. So in the green bracket, the first bracket, the total amount tax that you would have if you filled that entire bracket is $987.50. Okay. So the second bracket, if you filled it, well, how do we know how much is in that bracket? Well, that's simple. You take the ending point and you subtract the beginning point from it. So 4125, take away 9875. That tells us that there are $30,250 in that bracket. We times those by 12%, and that gives us a total of $3,630 of tax that would be payable if you were to have filled that entire bracket. So we take the cumulative amount, 987 plus 50 plus 3630, because you don't necessarily have to keep track of this on your own. It does it for you. 22%, same thing. If we filled up the entire 22% bracket, we have to figure out how many dollars are in that bracket. Well, $40,400 are in the bracket. Those $40,400 are taxed at a rate of 22%, which would give a tax liability of $8,888 for that bracket. And if we're trying to understand how much the tax liability is at this point, you'd have to add the tax liability for all three brackets. And again, you don't have to do this because the previous slide, I showed you why those things are already cumulative as we go along. So let's say that you had earned $80,526. So how much have you gone into the 24% bracket? Well, you do that by taking the income amount and subtracting the dollar amount that's the beginning, which is $80,525. So you've got $1 in this bracket. That $1 is taxed at 24%, which is 24 cents. So what's my tax liability? Well, all three previous brackets. So the 987.50 plus the 3630 plus the 8,888 plus the 24 cents that we would just figured out from the 24% bracket gives us a grand total of $12,615.74. So you see how this works? There we go. And again, instead of you having to do it like this, when it's set out in the text in the RevProc, it gives you the starting point for all the previous brackets before, so you don't have to do that math. So this is how a progressive tax system works. When you get bumped up to the next category, your tax rate does in fact increase, but it only increases on the dollars in that particular tax bracket. It doesn't retroactively reach back into the previous tax bracket and change the rate there. So if somebody tells you, yeah, I'm not going to work anything extra because I'm right up against that tax bracket where I'd have to pay more, and it wouldn't be worth it because I pay more in tax than I earned, they're full of it. They don't understand how it works. And you can explain it to them now. So when we're looking at a progressive rate system, is it perfect? Heck no. Heck no. There's a lot of changes that can be had. And there is a lot of messing around, mucking about. And the fact that the brackets change every year, I think, don't really, it's a taxpayer friendly thing that they change every year because they get the numbers increase for inflation. But it doesn't necessarily help the taxpayer understand it because the numbers always change. But again, a progressive tax doesn't change what the brackets below are taxed at. If you go into a new bracket, only the dollars in that bracket. Remember the infographic of you laying out every dollar you've earned in a year? Only the dollars that are in the new bracket will be taxed at the higher rate. So anyway, I think that you have learned about progressive tax, and now you can argue with people with knowledge. Good luck with that.